What a start to 2025. Markets all over the place. Things are tanking around the world. Inflation starting to rear its ugly head in all sectors. Consumers pushed to the limit. Credit card defaults are maxing out. And what are the Fed going to do to try and stop all of this? Are they going to be raising? Are they going to be keeping the same? I'm suggesting higher for longer, but who knows? Today, I'm going to be going through my game plan for this week. Stick around. Let's get straight into it.
I love gold so much that I even lost my genitalia in an unfortunate schmelting action.
This week, as suggested, is packed with high economic data and some key earnings. Earnings season is back upon us. My gosh, we're back into this cycle. Monday, not much for me to be trading in terms of earnings or news. So let's start with Tuesday. PPI is coming out month over month. This is obviously for December. It's forecast at 0.2. The previous was 0.4. So we're looking at a bit of a lightening on that. It's a buy signal for me if the actual is less than 0.1%. That's deflationary, meaning easing of inflation pressures. It's going to be a sell on gold if the actual is higher than 0.4. That's going to be inflationary. Upstream inflation increases. It's going to be a buy for me on the Nasdaq if the actual is lower than 0.0 or just flat. That's deflationary. Cost pressures decreasing. And it's a sell on the Nasdaq if the actual is higher than 0.4. Inflationary could prompt tighter Fed policy, which is what I am suggesting. Core PPI month over month December, it's forecasted 0.1. The previous was 0.2. That's a buy on gold for me if actual is lower than flat or 0.0, and that's core inflation softening. It's a sell on gold if the actual is higher than 0.3. That means sticky inflation remains high. I reckon we're going that way. The impact. So strong labor data last week suggests that PPI could remain elevated. Watch for surprises under 0.1 or over 0.4. Let's look at Wednesday and the beginning of the earnings season. Some big banks are going to be reporting their earnings. Let's look at the CPI month over month for December. It's forecast at 0.3. The previous was 0.3. So we're not looking, or the market at least, is not pricing in any change to that. It's a buy on gold if the actual is lower than 0.2. And that's deflationary, slower consumer price growth. It's a sell on gold if the actual is higher than 0.4. That's hot inflation reduces gold's appeal. It's a buy on Nasdaq if the actual is lower than 0.2. That's improved inflation outlook, supports tech. And then it's a sell on the Nasdaq if the actual is higher than 0.4. Hot inflation could weigh on equities. CPI year over year, 2.5. The previous was 2.7. So we're looking for the little softening in that. It's a buy on gold if the actual is lower than 2.3, signaling cooling inflation. And it's a sell on gold if the actual is higher than 2.7. That's signaling persistent inflation. Empire State Manufacturing Index for January, forecast at minus 5.9. The previous was 0.2. So looking for a bit of contraction there, at least the market is. It's going to be a buy on the Nasdaq if the actual is higher than 0.0 or flat. That's signaling stabilization in output. And it's a sell on the Nasdaq if the actual is even worse, lower than minus 7.5. That's going to signal severe contraction, and that signals weakness. And then we get into the earnings. We've got JPMorgan, we've got Goldman Sachs, BlackRock, Citibank, Wells Fargo, and Bank of New York Mellon. I'm not too familiar with that one, but hey. Gold, nothing really to look at. It's going to have an indirect impact. Strong bank earnings may shift sentiment to risk on. Strong earnings may boost equities and weigh on gold as a safe haven. Conversely, though, weak bank earnings could support gold as investors shift to safety. The Nasdaq, that's my main focus for Wednesday. That's going to have a significant impact. Strong earnings from major banks, especially JPMorgan and Goldman Sachs, could uplift the broader market sentiment, benefiting the Nasdaq, even though it's tech heavy. Weak earnings could pull down US indices due to broader economic concerns. In summary, Wednesday's bank earnings can significantly impact the Nasdaq and may indirectly influence gold based on broader risk environment. Thursday, We've got retail sales coming out. How is everyone doing? Like I said, credit cards are maxed out at the moment, so this might actually be better than what's forecast. Retail sales month over month for December, forecast at 0.5. The previous was 0.7. There's a buy on gold if the actual is lower than 0.2, and that's going to signal weak consumer spending supports gold. It's a sell on gold if the actual is higher than 0.8. Strong retail sales could reduce recession fears. But iffy on that, but hey, we trade both of them, gold and the Nasdaq. It's going to be a buy on the Nasdaq if the actual is lower than 0.2, and that signals weaker demand. That's a dovish outlook. It's a sell on the Nasdaq if the actual is higher than 0.8. Robust sales support further tightening. Philadelphia Fed Manufacturing Index. It's gonna be a buy on the Nasdaq if the actual is higher than 4.0, and that's going to be economic growth supports equities, and it's going to be a sell on the Nasdaq if the actual is lower than -10. Severe contraction signals economic weakness. Initial jobless claims, that's going to be forecast at 201,000. The previous was 216,000. This is going to impact gold for me specifically, and that's going to be a buy on gold if the actual is higher than 230,000. Weaker labor market supports gold. And it's going to be a sell on gold if the actual is lower than 190,000. Strong job market pressures gold. Go back to my previous videos once again if you don't understand that. We have got some earnings, and of course TSM. We've got a couple of others there, but I'm going to be focusing on TSM. Gold, again, it's going to have a indirect impact. So Taiwan Semiconductor is critical for global tech sentiment. Weak guidance could trigger a risk-off move supporting gold. Strong performance, however, could lead to bullish equity sentiment pressuring gold. The Nasdaq, as usual, is my main focus for the day, and that's going to have a significant impact on it. So TSM's earnings are going to have a direct correlation to the Nasdaq, and it affects the outlook for chip stocks like Nvidia and AMD. Strong TSM earnings could fuel a rally, while weak results could weigh on tech-heavy indices. In summary, TSM earnings are highly relevant to the Nasdaq and key for semiconductors. Strong guidance may fuel the Nasdaq. Weak results could trigger a tech sell-off. Watch that very, very closely. The market is very concentrated at the moment in a handful of stocks, and Nvidia is one of the biggest in the world, if not the biggest. So it's all about sentiment there. Friday, housing starts. Month over month December, forecast at -1.8. The previous terrible -9.8. It's going to be a buy on gold if the actual is lower than -4. Weak construction signals economic slowdown. It's going to be a sell on gold for me if the actual is higher than flat or 0.0. Recovery in housing reduces the demand for safe havens. It's a buy on the Nasdaq if the actual is higher than flat, and that's going to signal resilience, and it's going to be a sell on the Nasdaq if the actual is lower than -4.0. Weak housing pressures risk assets. Industrial production. So how is the industries producing? What are they producing, and how much of it are they producing? It's forecast at 0.2. The previous was almost flat, but it's -0.1. It's going to be a buy on gold if the actual is lower than -0.2. That's going to show a decline in production, which supports gold. It's going to be a sell on gold if the actual is higher than 0.5. Strong output reduces the safe haven demand. For me, the key summaries for the week, the key takeaways at least, the biggest earning impact day is going to be Wednesday, the 5th of January, and that's going to show particularly for the risk sentiment, and then for the Nasdaq, it's going to show the market break. Thursday, the 16th, TSM, critical for me, and that's going to be for the Nasdaq due to its influence on the semiconductor sector. Also look at the guidance that they're going to be producing for that. That might give you some ideas as to how the whole market is going to be shifting. Gold, it's sensitive to changes in risk sentiment, especially at this stage based on major earnings. Economic data to watch: Tuesday, PPI; Wednesday, CPI; Thursday, retail sales; and Friday, industrial production. Those are going to signal a lot of indicators as to how inflation is going. And remember, the Fed is all about inflation. We have a strong jobs market. Inflation seems to be coming down, but we're having a bit of a hiccup and things are starting to pick up. If you go look historically, when this starts to happen, things are not good. This is going to temper the Fed's outlook in reducing rates. This is why you're seeing gold start to plummet down, because we're starting to look at higher for longer again. Remember, we started off last year with higher for longer and we ended the year with reducing rates. That's why we had a big whipsaw in gold throughout the year. For me, critical deviations to watch, as I have noted previously, but I'll just give it to you again: PPI plus minus 0.2, CPI year on year plus minus 0.2. Key levels are going to be 2.3 or 2.7. Retail sales plus minus 0.3, so significantly below 0.2 or above 0.8. And jobless claims, 15,000 either way. Critical below 190,000 or above 230,000. My trade summary is what I'm looking for the week. On gold, it's bullish if inflation cools. So in weak inflation and economic weakness persistent. It's going to be bearish if inflation remains high. That's hot inflation. Economic data strengthens. If things are continuing to show that they are getting hotter and hotter and the economy is not slowing down, there is no reason for the Federal Reserve to reduce rates. Therefore, it is better for big institutions to keep their money in bonds, in treasuries, and all of the like. If they start reducing, of course, gold is more appealing because you could get a better return on your money. For the Nasdaq, this is my main focus for the week. It's going to be bullish, disinflation and strong earnings. It's bearish for me if hot inflation and weak guidance or sales. The game plan for the week, of course, I'm just focusing on Wednesday and Thursday for potential large moves in both of my favorites asset classes, which is gold and the Nasdaq. I'm going to be just looking at that inflation data, seeing if we're starting to run hot or if things are starting to cool down. All the best to you. I hope some of this has helped you prepare for your week. I hope you crash the markets and walk away with a cheeky little profit. If not, it's time to learn a little bit more of the macroeconomics. Again, this is not my only way of trading, but it certainly is my favorite way of trading, and that's big news events. All the best. Peace out.
I love gold so much that I even lost my genitalia in an unfortunate smelting accident. Smelting accident. Smelting accident. Smelting accident. Smelting.
Oh, Jesus Christ.